Hey, everybody. Good afternoon, good evening, wherever you are. This is Doc Severson, and I've got Dave Lukas here with 12-Minute Trading. Today is Monday, the 27th of February in 2023, and we've got another week of market action happening here. And after the last couple of weeks, we've got other, people have a lot of doubts about this market and are just wondering, waiting for the next shoe to fall on this market. Dave, what are you seeing in the equity markets right now?
Yeah, that's what a bear will do to you. You're always anything good. You're always waiting for the next shoe to fall, right? So we had a massive run up in January, and we now have this pullback, right? Which is honestly very much needed to continue a trend, right? So one thing I've been saying to my students is like we had a change in polarity coming out of December into January. We were putting in higher lows and now some higher highs, right? Now we're at a higher low right now. And so that's natural, right? You want to see it go probe to the next higher high. And that's the change in polarity that we've had in the markets, right? So right now we're still in great shape. This market's doing exactly what it needs to do, because if we just kept going higher parabolic, it would come crashing down. You can't sustain that, right? So to have a 5-7% pullback like on a NASDAQ after being up 17%, in a month, that's really natural price action. So this week coming in, I've been saying, like, I thought this week, and we're kind of seeing it today, I thought this week would be more of a drift week, kind of up and down, but we're not really going to go anywhere. We don't have a lot of news. We don't have a ton of Fed speakers. There isn't a ton of stuff that can really move the market. You and I were talking before this, and I thought I saw it on the calendar, but jobs numbers isn't even this week, and it's the first week in March. It's going to be next week now. So we don't even have the monthly jobs print
This seems like the first. This is like the first week that we've had without a PCE or a CPI or a PPI or some other, a big jobs report or some other ridiculous, overinflated, like all of these reports. I mean, we used to just ignore these things throughout the years, like
meant nothing.
And now everything, the sensitivity.
Crazy thing too. I was reading, I saw a stat the other day. We've had over 21% days, 1% plus days in the market this year so far. Now think about it. We're not even wrapped up February yet. It's like almost the whole month of the year has been 1% moves up and down. And I was saying to like our mastermind group and others, like, kudos to you guys. We're profiting through all this, right? That is like anybody who's traded for a while, you get your bears, and yes, there's some craziness with bears that happens and everything, but to have this several years of these moves, like 1%, like just become the norm, very different, very different from the way things used to be. Now it may be the new norm, right? But it's been a very different time. You see this type of movement up and down like this. So
something
we had a nice.
Something else that, sorry to interrupt here, but something else just to go along with that point has been, even though we've had all this volatility and all this movement, we really have not had an excess of risk premium in the options market. I mean, we're not sitting at a VIX of 30
VIX
or
is like
35.
19 or 20, right?
Yeah, it's still, and I think I've heard a lot of explanations for this, but a lot of the 0-day options are really responsible for that, because people are just not carrying anything overnight anymore. They just keep all the risk within the day or a very short period of time.
And that's what we're getting. The 0-day options, that's why we're getting these moves. And it's going to continue to be like that. That's why I said it's probably the new norm, right? Mm-hmm. And so this is the new type of world. Now there's a lot of opportunities in that. That's kind of what we try to capture with our strategies. That's why I love like iron condors for this type of stuff. Because you do 1%, but you kind of just stay in that range, right? But it doesn't. These things don't last, right? We're going to have a drift week this week. We're going to go up and down. I think the max or the expected move for the S&P this week was like 70 points, right? So a very different week than what we've seen, if that holds true. So I think we drift a little bit this week. We have energy that needs to charge back up on the charts. And then as we get into March, then we can look to start to trend again. But I'll tell you the thing that I'm watching, the chart that I'm watching that is just, I'm really keeping my eyes on it because I think it's going to be kind of the canary in the coal mine and really set the tone for the next few months, is the Dow. That Dow chart, especially like the weekly chart, you have a Bollinger Band squeeze, supercharged on this thing. Probably one of the highest levels that I've seen, gosh, in maybe a couple of years on this thing. Just ready to just bust out in a direction. So I mean, well, yeah, you got the chart up and everything. So just look at that energy on there. You've got a daily chart that's just as charged up, or you got a daily chart that's not charged up. It just gave up all its charge. So it's now at a point where you would expect that to turn around and go the other way. That's how you can recharge the chart, right? And go back the other way. Well, what if that coincides with a weekly swing and we get this massive run, this massive bull run from here that nobody's expecting, right? So yeah, that's kind of what I'm watching. How do you see it?
Well, what I would love to see, and this is one of my favorite signals that we see, and it's I will warn you, this is painful, and it's never a pretty thing to watch, but my favorite signal out there is what's called a double bottom undercut. So this is going to be, if we undercut this level that we hit at the end of December, and that's going to be right around here. So there's the end of December. If we end up plunging down here to maybe around the green line, here is the 200-day moving average. So if we end up undercutting the December lows and dropping like a stone, and it could be on any kind of catalyst which comes up in the next week or two, then we are going to see just fear just spike off the planet, right? People are just going to lose their minds and go, oh no, here we go. This is the, it's like the very feeling that you get at the very top, you go clunk, 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 all the way to the top of the roller coaster. And then you come over the top and you're like, here you go. It's going to be that same kind of feeling. Like everybody's going to strap on and think that, we're going to be just like dropping down to the October lows. And not to say that that couldn't happen, but what I've seen so many times on these double bottom undercuts is right when you gin up all the fear that's out there. So everybody's just going to be like, oh no, this is it, I quit. This is where you see these slingshot moves come from. So can you imagine what would happen? And this is going to be surrounded by some of the worst news ever, right? So you're going to be surrounded by all of the media channels just talking about how bad things are, and we're going to be talking about how bad the 2023 recession is. And all of a sudden, the market, when nobody is going long, is just going to rip from this thing. And so that would be what I'd look forward to. We get the double bottom undercut. If we come back into the pattern, this thing will take off like nobody's business.
That could easily happen without the weekly chart moving yet. You could easily get a probe lower, even with an exhausted daily chart. You can see on the daily chart where we have gone below the line where it's sitting at right now, at like in the 30s there.
Yeah.
And I've seen that where it's gone just further into exhaustion into the 20s. So you could see that maybe it's alpha jobs next week or something, right? And you see that happen, and then that weekly chart takes over, and it's just and that's the thing with a weekly chart. These runs can go 8, 10, 12 weeks, right? So it can set the tone for the next few months. And a lot of the other weekly charts on these, these different indexes are pretty charged up. They've got energy to go along with it. The Dow's the most, but this is kind of the big thing to watch right now. And yeah, there's a good example of a great move off of a weekly swing, right? With the energy back there.
Yep. Yeah, when we've seen these things before, both to the downside and to the upside. But this, yeah. This is what Dave's talking about. When you get all this,
there's your undercut.
The spring wound up. All of a sudden, this is where you get your big moves from these things. So, we've seen this movie before. So, not to say that we wouldn't respect it if we start to see the price break down below support levels. But it's all going to be where the price closes that day, because what I would expect to see is something like this, where we start off with, we start off the day with just a really, really bad candle and just pushing the lows way down to here, and then actually closing well higher on the day. And after a couple of days of shaking off all the pikers, this is when it just takes off. So a big hammer candlestick down at the bottom.
We've been seeing that type of behavior. Friday was a great example of that this past Friday, where we sold off pretty hard and then ran it back up into the end of the day. It didn't hit necessarily the levels that I would have liked to see. We got those back today, actually, being Monday. We'll see if they hold, but it definitely, some buying pressure came in the final hours of the day on Friday and ran it back up before a weekend, mind you, which is not something if there's a bunch of fear, people don't want to hold over the weekend. So to see the strength and conviction in the weekend is a good sign as well, too.
Yeah. So what we're looking at right now, we've got support at about 39.40. And we have resistance at about 40.20. So we're about an 80-point range over these last 2 days, which again is just stunning that we're seeing this amount of volatility. But what Dave is saying here is that with this exhaustion, we would expect to see some type of a counter trend move, maybe sideways to slightly up, which is the definition of a bear flag. And we may get a release under that from there, which is going to drive that potential undercut. So we'll see what happens, but I think we're clear sailing maybe for the next few days or so, and then we're going to start to become a little bit more cautious as we get into next week. And there's going to be, there's that much more chance for Fed speakers, and they are on a mission to cripple this market because, as we've talked about, it makes their job tougher if the market rallies. So they do not want to see the market rally at this point.
Well, that's something to talk about too, because the underlying fundamentals right now, if you look at a lot of the big things happening out there, aren't that great. I mean, and to be truly honest, there's a lot of big macro indicators that are flashing not good economic signs, right? In fact, like delinquencies on car loans. In fact, a big subprime car loan lender just went bankrupt over the weekend, gone, shut the doors, right? And that's one of the things that you see prior to like recessions, prior to downturns in the markets, is things like car loans delinquencies start to go up and things like that happen. But the thing that I will remind everyone, and I think this is most important, is the market is not the economy. And you really need to understand that. I mean, think about the pandemic in 2020. The economy was shut down. You literally could not do business. You couldn't sell anything for a lot of businesses. You couldn't buy anything. It was literally shut down to a halt. What did the market do? Right? Now, granted,
and nobody could figure it out. Everybody was doing one of these things, like what, but, like what? How is this possible? Yeah. And it's like I saw so many people get run over, we
printed trillions of dollars, and it has to find a home, and it found its home in the market.
It did.
But the point I'm saying is that's why just because the economy could go into or has a recession doesn't mean the market's going to crash. And I think that's a really important distinction that you have to have in the back of your mind. Remember, we're watching a market that has changed polarity, that is putting in a higher low and higher high, higher low. We'll see if it gets to a higher high from here. Until that changes back to going down to a lower low and a lower high and all that stuff, then we have changed to more bull market mentality. So, regardless of what's happening in the economy, if you're watching price, which is really all that the biggest thing, and that really all that matters, you can have 50 million indicators, but price is king. That's the key that we need to continue to watch. And so if some of these levels are broken and lower highs are printed and then lower lows, we know we're shifting the paradigm back the other way. And that's just the way it is, right? So I think it's I think that's most important to really understand. The market is not the economy. So
right. And notice what we're saying too. We're not predicting what the future holds. We're just looking at this and saying, if anything, what we're saying is, well, we sense the herd is going this way, so we're looking to go the other way because those guys are all going to be wrong at some point here. And so we're looking we're looking for what is the direction that this market would go that the fewest people would be, anticipate. And that is exactly what the market will do. I mean, I've seen this happen so many times, and it's like, this is why I've stopped listening to the news, because it will absolutely, it will imbibe that sort of sense of conventional thinking into that. And then you end up being on the wrong side of the market because the market is not a conventional thinker.
Yeah, that's good that you're not on Twitter putting little rocket ship emojis and everything under
Yeah.
stuff,
Yeah.
because I guess you can go to jail for that now. I guess some judges ruled that if you put that in a Twitter post or something, if you're talking about a stock, you can be held liable now. So
Yeah.
all of you out there, be careful with your rocket ships to the moon and all that type of stuff.
Yeah. When moved.
So I saw that this weekend. So I was like, yeah, you got to be careful now what you even do there, right? So thankfully, we don't do a lot of rocket ships because we don't really care about so much direction. We just care about it staying within a range for our type of trading and stuff like that, you know. But yeah, so be careful watching all those rocket ship emojis out there, everyone. The only other thing that I'll say, and again, I'll go back to it, we're not going to call the direction the price is going to take it in the direction that it goes. I just still think that that Dow chart, when that weekly starts to break, it's really going to signal the next major trend, and just let it happen, let it show you where it's going to go, and then take advantage of it. If you're a directional trader, it'll tell you the direction things are going, you know, over the next however many weeks, months, and that sort of thing. So you can take advantage of it, but be patient, because it doesn't usually those things don't unfold like in a day, right? For a weekly chart, it needs to go through a week or even into 2 weeks, and then really kind of, you know, cement itself. Usually I say when the chart gets to like 50 on the energies from like a 68 where it's at now, that tells me that that trend's really kicked in and everything, and that you can pretty much call it that way. So right. That's a great signal to watch over the next few weeks.
Okay. All right. So we want to thank everybody for checking us out here today with our little market opinions and what we see happening on the charts. Again, we do this once a week, and we love to take your questions. So whether or not you're watching us live, or if you're watching this on a replay, just think about next week. If we come on board here next week, you know, we'd love to take your questions even ahead of time. Hey, can you guys, you know, cover this when you guys do it live? So we're happy to do that. So with that, from Dave and myself here at 12 Minute Trading, I'd like to thank you guys for hanging out with us once again, and we will see you guys next week. Thanks everybody. Take care. Da-boom.